Hi, Deb Irvin here. And today's Tuesday Tweak, we're going to talk about cash flow, the hidden cash flow. Right now, there's a lot of worries about the economy. Inflation is still very high. This is a chart of a consumer price index over the last 270 years. So think about like the cost of eggs over the past period of time. See how much they've inflated. Well, what that means for you is that you have to spend more money to buy the same services or the same products. You're paying more to your employees for doing the same job, and that is impacting cash flow across the board. Now, you're trying to grow your business, and it's difficult to do in a difficult economy, and so you really have to work carefully with the resources you have. Now, let's say you have a well-run company. The one I'm going to show you has $1 million in revenue and $100,000 in profit. But profitability does not equal cash flow. That surprises a lot of people. Profitability is your income statement, and it is recorded according to GAAP. And GAAP says you made a sale, whether or not you collected your cash. So let's look at where your cash flow hides. So as I said, your cash flow hides on your balance sheets, not your income statement. It's on your balance sheet, and I'm going to show you. So here's my $1 million revenue company, and because of the economy, they said, well, we're going to keep a little more cash on the balance sheet. So they went from $113,000 to $125,000 in cash. Now, that uses cash, right? They're sitting with more on their statement. So when we look at cash flow and where it's hidden, what we're going to look at is the change. Now we can look at the change year over year, as I have in this example, or you can look at the change month over month and make sure, see what's happening. So the accounts receivable for this company went from $65,000 to $95,000. That is a $30,000 increase. That means that the woman who owns this company has $30,000 less cash in her pocket. She has created these products and sold them, but she hasn't been paid. So she had to pay her workers, she had to buy her products, she had to do all these things with her money, but she hasn't gotten paid yet. That's the cash flow gap. And this is where $30,000 is hiding. She creates a product, and so $25,000 is in inventory. She's got goods and materials sitting on her shelf, which aren't being sold. So again, that's $55,000 sitting around, not being put to use, not being able to pay employees, not being able to pay vendors. It creates a cash flow crunch. Now her prepaids, that's her insurance policy, and last year she had to pay a lot more, and so she had prepaid $18,000 at the end of the year, and this year she only prepaid $12,000 because they reduced the policy because she'd been in business a long time. So that saved her a little money, gave her $6,000. So that loosened up a little bit of her cash flow. So let's look at liabilities. Now, one of the ways to improve your cash flow is not to pay your vendors as quickly. So here you can see that her accounts payable went from $83,000 to $93,000. That's a $10,000 benefit because she kept the cash. She did not pay her vendors as quickly. Now, if she was paying her vendors every 10 days or when she got the bill, then that's fine. Just pay in terms. The vendors give you 30 days, take all 30 days, not a problem. If you've been paying in 30 days and you go to 45 or 60, they're going to notice. That's a big red flag. Hey, things are slowing down, something's wrong with this client. So changes in behavior will flag you. But here she got a little bit of her money that she was sitting on her assets back. But she spent a lot of money paying down her line of credit, $40,000. Now maybe she had to, maybe she wasn't thinking about conserving her cash. Maybe this is the time to go talk to her bank and see if she can change some of the terms. So those are the kinds of things that you want to think about in terms of your cash flow. So 1, collect from your clients. 2, pay your vendors in terms. And 3, in difficult economic climates, it's really good to manage your cash carefully. You may be able to take advantage of some opportunities, buying a competitor, buying a great employee from a competitor, and you want to have the cash on hand. I'd love to talk more to you about this, or join my Bomba community, and we can talk about cash flow all the time. Let me know what you think, and I'll see you.